There's a hidden system on Wall Street that retail traders will never see, but the professional traders use it every day. If you've ever felt like you're playing a different game, you are. Right now, there's a massive supply-demand imbalance in the trading world. Funds can't find structured traders, and traders can't access capital. Before we start, nothing in this video or anywhere on this channel should ever be misconstrued as financial, investment, or trading advice. Trading futures, options, and other derivatives involves substantial risk of loss and is not suitable for all investors. You can lose more than your initial investment. All examples here are for educational and illustrative purposes only. I am not acting as your broker, dealer, investment advisor, or commodity trading advisor. Nothing here constitutes an offer to manage money or execute trades. Past performance is not necessarily indicative of future results. This content is about structure, compliance, and professional frameworks, not signals or recommendations. I just want to talk about this massive opportunity that I have been witnessing in the trading world on social media and the internet. Right now, there are more traders, more quants, more capital raisers, and more qualified sales personnel than I've ever seen before, right? Everybody wants to be a trader. Everybody wants to, blow up an account, whether you see what's happening on Wall Street Bets or Instagram or YouTube, right? Everybody's talking about trading, investing, different ways to make money. All of it's wonderful, right? I think it's awesome that people are out here sharing their advice, sharing their opinions, sharing their strategies. But it's important to note that while there's so many people that are interested in trading, very few of those people will ever make it onto an institutional desk. And the reason is not because they're not great traders. It's not because they're not talented. It's not because their ideas aren't valuable, but it's simply because there's a very small amount of these high operating hedge funds, and there's a massive supply of traders and human capital. Now, on Reddit, I follow all the quant forums, all the trading forums, all the different subreddits, and I'm constantly looking at what's happening in this marketplace. And what I see is absolutely astounding, right? You have traders and mathematicians and quants, people that are graduating with Ivy League educations, right? PhDs in applied mathematics, physics, all of these different high-level educational backgrounds that are literally getting shut down by hedge funds, right? Jane Street, Point72, Citadel, all these big funds, they hire quants, they hire mathematicians, but a very small percentage of that talent ever makes it to a desk, right? And it's super important to see the discrepancy here because there's a massive opportunity in this supply and demand imbalance in the hedge fund industry. The competition for capital is cutthroat, right? And the big funds, because they already have so much capital, they can spend billions and millions of dollars, right, to acquire new talent because it's in their best interest to do so. But what happens to all of the other great traders and highly qualified individuals that get shut out from this industry and actually never make it into one of these entities, right? Well, most of the time they go and they pursue other things, or maybe they trade their own capital. But I'm here right now today to tell you that this is the most unbelievable opportunity that I've seen in the form of human capital that I think is ever going to exist besides the displacement of human capital that's happening because of AI. And there's a very easy solution for this supply and demand imbalance where we have all this great talent and a very few limited number of seats at hedge funds. And the strategy here is very simple, that we're going to build our own structures and we're going to raise our own capital and we're going to gobble up all of these people that don't get a chance to show their talent and their intellect inside of one of these big hedge funds by starting smaller funds and incentivizing this talent and this group of people to come to a smaller fund to work with us. And why is this important? Why is this necessary? Because if somebody doesn't do this, then this capital, this human capital is going to be lost, and it's going to be a massive, massive, massive failure for anybody who's a trader or a portfolio manager or a capital raiser to look over this supply and demand imbalance and to see that there is something that can be done about it, right? The idea here is that if capital doesn't invite you in, then we're going to build the structure and the framework ourselves so that we can go and get the capital and do the same thing that these big funds are doing, but using our own talent, our own workforce, our own structure, and pretty much playing the same game as the big funds are playing, but starting at a very small level and working our way up. This is why I created the daily option and the alpha bridge, specifically to take advantage of this supply and demand imbalance that I see in these upper levels of finance. So I want to talk a little bit more about this supply and demand imbalance. Really what you see is you see a lot of traders on Instagram, on YouTube, guys that maybe have made millions of dollars, whether it's through education or their own strategy or maybe using prop firms. And I think it's a really great thing, but at the same time, it can also be kind of detrimental to newer traders, and it can also limit those same great traders from ever rising to a place where they're actually managing capital for family offices, for other funds, for businesses, even hedging for manufacturers and producers. Retail education is creating unstructured traders. And what I mean by unstructured traders is that the retail education is focusing way too much on the strategy, because traders feel like, okay, if I can win consistently, then I'm going to blow up and I'm going to make a lot of money, which isn't necessarily the case, right? The sure way to make a lot of money is to have a high paying job and to like shovel your cash into assets that over time produce, a nominal return, right? And it's important to understand that everybody should be using a long-term strategy like that. And at the same time, we should be looking at short-term strategies that allow us to pull alpha out of the market. But doing this from a retail trader's perspective is going to limit our ability to use some of these structures and licensing and ideas that the big funds and the big banks and the big traders use to manage and raise billions of dollars for essentially similar strategies, which are obviously much more mature, right? Because when you have billions of dollars and you're paying quants, millions and millions of dollars, right? You're able to execute these strategies at a very high level, but it doesn't mean that retail traders can't also use the same strategies and then work their way into the compliance, the strategy, the structure, the same stuff that the funds use on a much smaller level. Institutions require auditable, disciplined programs, right? Retail is typically selling setups where institutions are setting up and buying structure, right? Their capital structure, their capital stack, their technology stack, and the way their strategies are organized. It's much better suited to play this game at a really big level. And my idea here is to bridge the gap between that retail thinking with the institutional strategy, compliance, and structure. This is really the foundation of why, again, I built the daily option and have been developing the alpha bridge, which is specifically to find the best traders, the best quants, the best capital raisers, and to give them an ancillary path that is outside of the traditional Wall Street Ivy League type of idea where, you have an Ivy League education or you go work for a fund or an IB. And then after working there for 5 or 10 years, maybe you have some capital, you have some connections, and then you go and start your own fund. All of that is complete nonsense. And I know this personally because I traded my own capital for 10 years as a retail trader before meeting a commodity broker who became my mentor and really kind of taught me how this game was played, helped me get licensed, kind of show me how these processes operate and really got my foot inside of the door in this industry. I think another really important thing to talk about is just kind of the mindset here, right? Most retail traders, including myself, we're really stuck on like trading our own capital or using prop firm capital because we feel that it gives us a lot of power, it gives us a lot of freedom, and to a certain extent that is true, but you have to remember that there's no other business model in the world that doesn't at some point look to raise equity or debt. And now, if we can frame this the right way and we can realize that trading is super powerful, anybody can access it, like the money is right there in the market, right? You have market makers waiting to take your bet, right? If we can figure out the right strategies to use, the right system to apply those strategies, and then we can use the same structure that the big funds use, right? And it's not just hedge fund, it's venture capital, private equity, debt funds, right? The same things that real estate guys are using, right? You see all these ads on social media, people that are raising capital and funds for real estate deals. Essentially, the same thing happens in the trading world. It just happens in a much different way. And the money-making mechanism is much different and requires a different set of rules and systems to be able to run effectively. Now, I want to talk just a little bit about myself and kind of who I am. My name is Ryan Mathis, and I'm 39 years old. I started trading and investing with the help of my grandparents somewhere back around 1998 when I was 13 years old. I attribute all of my knowledge and my trajectory to my grandparents, right? They were average stock market investors, right? Dividend investors, buying blue chip companies, building that compound growth engine that paid them money their entire lives, right? And it was that insight that they gave me that kind of set me on the trajectory of being an entrepreneur, investing in, different businesses along with the stock market, futures, options, things like that. I started trading futures and options in my early 20s at the same time that I was playing poker. I traded futures and options by myself for about 10 years, right? I had my ups and downs. I even paid a couple people to look at their strategy and try to help me, but I really didn't understand the game that I was playing, right? I really felt like there was a lot more to learn in the futures and the options world. And I knew that there were, bankers and hedge fund managers and guys that were doing this on a really massive level. And I really, kind of set out to figure out how that was done and to place myself in a situation where I could learn from people that have already done this or were actually doing it. Now, to make a long story short, I ended up, through serendipity, finding a guy's card in a book randomly that led me to a commodity broker who eventually became my mentor. And this commodity broker had been doing this for 20 years. He had been running multiple CTAs, managing capital for clients. He was also involved in introducing brokers. And we met and we hit it off, and he eventually became my mentor. He worked with me for 7 years. He helped me pass my Series 3. He helped me pass my Series 30. He helped me get my registrations. And he really exposed this entire world to me from an inside view, right? Really helping me get my foot in the door so that I could pursue that same path of playing the option and the futures game at a really large level, at an institutional level, inside of the same structures that these big guys are using. And you have to realize I traded for 10 years before I even knew what a commodity trading advisor was, right? I didn't really understand the industry. I didn't understand the game. I didn't understand, how they apply the strategies, right? How they manage the risk. I didn't understand the capital stack, how does the capital flow? What type of agreements and exemptions are even available, right? How does the licensing and compliance work? There's a ton of stuff that you have to learn before you're able to take a strategy you have and go out and raise capital for it, and then raise the capital and then go out and actually make money for yourself and for your clients. I think this is really, really overlooked just in the sense because trading futures and options is notoriously difficult, but it can also be very counterintuitive, right? Because you could be in a place in your trading career where you make a lot of money and then you lose a lot back, or maybe your strategy has much less risk and you're just constantly grinding, and you're making a little bit of money. And in the back of your mind, you know that there are people out there that are making a lot of money, and maybe you don't know how, maybe you do know how, but you know that it's possible for you because you see the value in the futures and the options and how easy it feels at times to make money, and similarly how easy it is to lose money, right? It's super easy to lose money and it can be super easy to make money. The emotions around these experiences and how we respond to them can really misguide us at times, right? And I think it's really important to understand that, just to understand that this is like a big game, and there's a lot of people playing the game at a lot of different levels. And, as an example, I'm not against prop firms, but prop firms are very limiting, right? They're very limiting because you're trading somebody else's capital. You're going by their risk. You have very stringent down draw rules, and they're really trying to find the best traders that can follow their system, which incentivize them to make more money. And at the same time, they make a lot of money because people fail these prop challenges and then they have to keep paying, right? Typically, this isn't how it works in the hedge fund world or in the CTA world, right? Like if you have a really great strategy and you've shown your ability to make money, you're almost incentivized to move away from the prop firm structure because the availability of capital and the fact that there's much better structures for somebody who's qualified and who has a great strategy, for you to 50x your income simply by choosing another structure and going after capital in a different way. And now I'm not saying any of this is easy, and I'm not saying it's suitable for anybody, right? It is notoriously difficult to be able to do this simply because there's a lot to learn. And most of the time, if you try to do this on your own, most likely you're going to fail. And one of the worst things you can do is to go out into an actual fund structure and raise capital and then come out of the gate losing client money, right? That's like a detrimental career ending type thing that I've personally seen people go through who were brokers and people trying to do these things that I saw go before me, and they tried to move too fast and they ended up failing and losing money, and it was very hard for them to recover. And so there's a much better way to actually do this, and there's a much better way to transition from retail into institutional structures and compliance and exemptions and registrations that doesn't guarantee your success, but it makes it much easier for you to go from being retail into an institutional trader who's actually managing capital for businesses, family offices, friends and families, and even, hedging risk for manufacturers and producers. Now, one of the things that I want to talk about is just the importance of licensing, and just the ability for you to actually go out and get a series license is probably one of the biggest hurdles. I talk more about this inside of my program, Alpha Bridge. You can click a link below, check out my VSL, check out my video. You could also click the link below and join my free school program, my free school community that I've created for traders, for investors, for quants and capital raisers who are interested in getting their foot in the door in the institutional world. Again, I've created a free video and a school community. Click the links below. I would love to see you inside. The over-under is really being able to, get out of your own way, not have an ego, come with a beginner's mind and actually look at some of the structures and exemptions and some of the things that are available to you as an investor, as a trader. It's not just traders and it's not just quants, but it's also capital raisers, right? If you're doing high ticket sales already and you want to make pretty much unlimited money, then you are so incentivized to go out and get a broker's license and raise capital for funds and trading programs, because there really is no cap on the amount of money that you can make. With the high ticket sales, maybe you're selling a $10,000 product and maybe you have a 30% commission, right? You make $3,000 on a sale. If you take that same skill set and you become a broker and you're associated with a fund or a CTA or a big trading program, you could go out and raise $10 million. You are going to make a ton of money, right? In this structure, selling this product, right? With the right licenses and with the right connections and going through and understanding how that all works. All of the things that I just talked about, again, is really the reason why I created the daily option, right? It's really what is the underlying DNA of the Alpha Bridge, which is really to find the best traders, find the best quants, find the best capital raisers, and give them an alternative into this market where doors have probably shut on them before. And it's really important to understand that if you're a trader or a quant who's trying to go get hired at a hedge fund, most likely you're not going to be a portfolio manager, and you're not going to be a broker, you're not going to be a CTA, right? Most likely you're going to be someone who is hired on a compensation package, which the compensation package could be extremely lucrative. We're talking, 10, 20, 30, 40, 50, $100 million for some of the quants that are at these top performing funds, right? At the same time, if you're not a PM, if you're not a CTA, if you aren't a broker, you really aren't owning the intellectual property that you bring to the table, right? Most likely you're signing an NDA, you're signing a non-compete agreement, you're signing all these agreements that pretty much prevent you from keeping your intellectual property. Inside of the Alpha Bridge and kind of what I'm proposing, I'm going to show you how to become a PM, how to become a CTA, how to actually maintain control over the fund, over your intellectual property, and how to actually be the one who has the performance fee and has the management fee. This is the most important thing that I don't think a lot of traders and quants and capital raisers actually understand, is the difference between being a hired trader, a hired quant, versus somebody who is the portfolio manager, the principal, the CTA, right? The broker, right? There's all these different little positions that you can fall into. And it's really important that if you're playing a game where there's this much money at stake and you already have the talent, the skill, and maybe even the strategy where you're already making money, this is going to be the most eye-opening thing for you, because, if you jump on a call with me, I'm going to take you through and show you exactly what it is and how you can do it. I'm not necessarily looking to hard sell anybody. I'm really looking to connect with the most talented people and figure out how our skill sets can benefit each other so that we can both do what it is that we want to do, right? Like, I've traded for a long time. I know a lot about this stuff just because of my experiences. But at the end of the day, I don't even really want to be a trader. I would much rather operate something like a fund of a fund, right? Something like Anthony Scaramucci and Skybridge, right? Where I have a fund structure and all I do is raise capital and divvy out that capital to the best traders and quants in the industry that I can find, that I help, I coach, I get licensed, I teach them the structure, and then they bring their skill sets to the table and we are able to play this game at a really big level by helping each other. This is an industry that's built on networks. I know you're probably already aware of that. But like I said before, because there's such an imbalance in the supply and demand, where we have all these great traders and quants and capital raisers and salespeople, and we have a very minute, limited number of actual funds that are like taking and onboarding this talent, I see a massive opportunity here for everybody that's on the outside looking in to like come together and create our own structures and essentially do the same thing that the big funds are doing, but starting at a very, very small level. Now, I want to talk just a little bit about the strategy, right? I know that traders are obsessed with strategy, and, you've seen ICT blow up and entry models, and all different types of strategies exist out there: quantitative strategies, high frequency trading strategies, discretionary strategies, systematic strategies, right? I think it's super important that when you think about this game and you think about the sheer number of assets there are, right? Like, futures markets touch 180 markets worldwide. The crypto markets are huge, right? You have all of these different markets and assets and all of these different strategies. And it's super important to understand that when you have a very specific strategy paired with a very specific asset class, this is how institutional trading programs programs are built, right? Because at the end of the day, there's all these financial products. You're trying to build a product for a money manager or a family office or a city endowment or whatever it is. Some of the strategies and things that I see retail traders talking about, like, they would never work in an institutional setting, right? Because the risk isn't there, the numbers don't work out, right? For whatever reason, a lot of retail traders, they're not thinking about the strategy and how it applies to like scaling something to a large level in the same sense that they would if they were like maybe using 10 or 15 prop firm accounts and they were just doing a very small thing at a very small time. Obviously, you can make a lot of money doing, like, you can make a lot of money in the markets a lot of different ways. But for traders who want to actually scale to 10 and 11 figures, right? 9, 10, 11 figures, and have an incentive of performance, have an incentive for management. Like, you really have to understand the strategy, the structure, the compliance, and how all of those things kind of work together. It's also super important to understand that, like, if you're trading prop firms and you're trading futures outright, directional trading like that with stops is very, very capital inefficient, right? You'll see a lot of people who are using ICT entry models, looking at liquidity sweeps, and you're looking at how some of these things work. It's very capital inefficient in the sense that if you don't have your levels and you're not looking at the market the right way, like, you're going to get stopped out. And a lot of the times, if you're getting stopped out, it means your strategy isn't great. And it means that you're losing money to the volatility in the market, or maybe your entries are wrong, or whatever it is. I could tell you from my experience getting my Series 3, getting my Series 30, working with a commodity broker who was actually trading and managing capital for clients. Most of the time, he was never trading futures outright. And most of the time, he was trading options. He was selling premium. He was doing spreads. And he was using strategies that required no stops. Okay, this might be hard for some traders to understand, but there are strategies where you don't need stops, that the risk is defined, and that literally the market can do 4 things and you're still going to make money simply because we're selling premium and we're theta positive. We could be delta neutral, we could be delta positive or delta negative. But most of these strategies were theta positive, vega positive, right? Increase in volatility is helping the strategy. I just want to bring this up just to kind of let you know that there is a world outside of the prop firm capital game where strategies are not based around a perfect entry and having the perfect stops in place. Selling premium and spreads is really about controlled exposure. Institutions are seeking controlled exposure. They're seeking uncorrelated risk-adjusted returns, right? That's what these programs and that's what these guys really are all about. And that's what the investors look for, right? Managed programs aren't necessarily about beating the S&P 500 or the NASDAQ. It's more about smoothing cash flow and being able to outperform the market as a whole through times of high volatility. There's a lot more that I could talk about that goes into this, but that's kind of the general idea. And the most important thing that I want you to take away from this is that outside of the prop firms, using options, right? There are strategies and ways to pull money out of the market that are non-directional, where you don't need stops, and where the market can do a lot of things and you're still going to make money. Of course, nothing is guaranteed, right? There's always risk. A lot of the strategies that are define risk, they start at define risk, and that risk changes as the option moves into expiration. This isn't really a trading or a strategy video, but I just want to put that out there so you have a little context about, what I'm talking about. Inside of Alpha Bridge, this is something that we go into in much more depth, right? Like understanding these strategies, how we use these strategies, and how we build trading programs around these strategies, and how you can take your strategy, like you could take a strategy that's a futures only, long or short entry with stops, and we can figure out a way to do the same strategy using options where you're using no stops and your theta positive selling premium. There's many ways to attack the industry when it comes to strategies, but the most important thing to understand is that like strategy selection is super important when you're trying to make the change from retail to institutional. Same thing goes for algorithmic traders, right? Algorithmic trading is not like a set and done thing, right? Most of these algorithms are being watched by quants. The quants are being watched by portfolio managers. The portfolio managers are watched by principals. All of the little details are being overwatched because you can't just allow an algorithm to have free reign. I'll be careful saying that because I know that there are funds and there are programs that are only algorithmic or high frequency trading programs where everything is done that way. But you're talking about highly mature platforms and algorithms that literally have billions or trillions of dollars of capital behind them. It's a much different game at that level than it is if you're first starting out. I know a lot of people who trade algorithmic trading strategies or are building these things would know this, right? That some strategies work with a small amount of capital and some strategies don't work with a small amount of capital, right? You even see this in Jim Simon's Rentech, right? Renaissance Technologies. His medallion fund is capped at a certain amount of money because they figured out over time that it's just not a strategy that's going to work once capital scales past a certain level. There's always levels to the game. The strategy is very important. There's many strategies available to you, and not all of them are going to be created equally when we're moving from retail to institutional. Now, one of the things that I want to talk about is just the governing bodies, some of the compliance and the structure of like how these things are happening, right? If you're trading futures or options and you are using an automated strategy or something where you want to trade futures or options on behalf of clients, or you want to hedge risk for manufacturers or producers, you're going to need a commodity broker's license to do this. You're going to need to understand how these things work, right? You're going to need to be able to get the license, get your registration. Most likely, if you're brand new and you don't know anything about this, you're not going to be able to do this on your own. You're most likely going to get your broker's license and go work for an IB or go work for a CTA and spend some time there and actually see how it's done before you go out and start your own program or launch your own fund or whatever it is you're going to do. Now, there are a lot of different series licenses, right? You have the SIE, you have the Series 7, Series 3, Series 65, right? You have hedge fund structures, right? GP, LP with an LPA and a PPM. You have RIA structures, right? There's all of this information in the finance world that is overlapping. And it's overlapping because unless you see behind the door, unless you see it from the inside, whether you either get one of these licenses or you go work for one of these entities, it can be very ambiguous to think about these things, right? And I'll give you a perfect example here. When we look at hedge fund managers like Ray Dalio and Ken Griffin and Jim Simons and Steve Cohen and like some of these big hedge fund managers, when we think hedge fund manager, we're thinking of the hedge fund structure, which is general partner, limited partner with a limited partner agreement and a private placement memorandum and some type of SEC registration or exemption for you to raise capital. Most people do not realize that most of these guys who are hedge fund managers, they're actually commodity brokers, and it's the commodity broker aspect of their business that really allows them to do what they do. Now, this can be very ambiguous, and I have to be very careful talking about it because I don't want people to be confused or led down the wrong path in terms of the thinking. Remember, there is like more than one way to skin a cat in this industry, right? You can launch a hedge fund and you can do a lot of things. If you don't have a Series 65, you're not going to be able to charge a management fee. There's a lot of different levels to this structure and how this works. And it's really important for you to understand that there's a lot of things that you're going to have to learn and research and kind of understand conceptually and then get the right context of like how it actually applies in the real world. I just want you to understand that securities licenses are very, very important. Understanding the governing bodies and how their oversight relates to the market and to the participants, how important that is. And of course, like I said before, everything I'm telling you here, this is for education purposes only. I'm not your broker, I'm not your CTA, I'm not your financial advisor. Any and all of these things are going to require you to have a great securities attorney, right? You're going to really need to have a grasp from a capital point of view, but also from a legal point of view, if this is something that you even want to embark on or actually try to do. That's something that I can't answer for you because, again, I'm not telling you any of this because I'm not your advisor, right? I'm not your financial advisor, I'm not your lawyer, but I'm just trying to expose you to this world and to try to set the frame for you so that you can really have the gears start to tick and that you can go out and research these things and you can go out and see like where the value is, and you can start to apply yourself so that you are best equipped to make the best decision, right? Believe me, there are lawyers out there who would love to charge you $500 an hour to sit down and talk about these things with you and help you map out a plan. But the whole reason I created the Daily Option and Alpha Bridge is really to teach you as much as possible and to save you the most amount of money before you actually dive in and actually start to work on executing some of these things. It's super important to realize that you don't actually need to jump in with lawyers and to like do all this complex entity formation and things like this. There actually is a transition framework that allows you to transition from a retail trader to an institutional trader without incurring these hefty fees, right? There's a way that this is done. And this is what I learned when I got my series licenses and I work with my friend and my mentor who's a commodity broker. He showed me all of the ways that people make this transition that don't require a lot of upfront capital, that don't require a lot of formation of entities. And that's the whole point that I'm trying to make here, is that there is an ancillary process besides what the banking and the hedge fund world is telling people. The artificial scarcity that is created by this small amount of hedge funds and this massive oversupply of capital raisers, quants, and traders that want to be doing this, there is another way to do this, and that is my whole message, okay? Important to know, right? We have different layers and different things that we're starting to get into, right? The series licenses, the compliance, the structure, the raising of the capital, and then the actual strategy that we choose, how we protect it, how we raise capital for it in a legal and compliant way, right? Everything needs to be done legally and by compliance, right? Which is why even in this video, I'm required to tell you this is for education purposes only, right? It's not trading advice. It's not financial advice. I'm not your broker. I'm not your CTA. I'm not your financial advisor. It is super important for you as a trader or a money manager or a quant or a capital raiser that no matter where you go in the world of social media, that like anytime you see somebody telling you something about returns, if they do not tell you that you have an equal and highly probable chance that you're going to lose all your money, I can just tell you for sure that they're selling you a crock of bullshit, okay? And if you get your series license and if you start to study for something like this, it is going to be known to you very, 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 very quickly just how important it is to have the right disclosures, to have the right language, to frame and to talk about these ideas in the right way. Because believe me, there are traders and there are businesses and there are people out here selling digital products that are going to get sued by the FTC because they do not have the adequate disclosures in place. And it's my job, not only as a trader, but as someone who was involved in this industry, to be super transparent about everything and tell you exactly how it is, whether you like it or you don't, right? I want to talk just a little bit about the Alpha Bridge and kind of how I came up with this and what I think is the most important things for you to focus on when you're trying to make the transition from retail trader into institutional fund manager. The three pillars that I have in place are broken down like this. We have structure, right? Structure is operational discipline and reporting. The difference between retail traders and guys who are pros are the way they think about the strategy, the way they manage the risk. Guys who are professionals are really, really good at not losing, right? They can extend the timeline of the trade if necessary so that they don't lose. But a lot of these big funds, they got to where they are by being great losers. And when I say they're great losers, it means that in their strategy, in their management, in their risk, through failure, through losing money, they have iterated to a place where they are really, really good at cutting losers quickly, not getting into trades unless they know all of the different ins and outs of the trade. And it's important as a retail trader for you to understand that as well, right? The structure, the operational discipline, and the way that you report and look at the numbers is very, very important. The second part is compliance, right? We talked a little bit about this, but compliance is the alignment with licensing frameworks and governing bodies. You want to be compliant with the FTC, the SEC, the NFA, the CFTC, right? All of these governing bodies that are out here watchdogging these entire industries. And now I know a lot of retail traders have bad opinions of these entities. I'm not going to get into whether that's true or whether it's false. I just want to outline and show you the importance that if you want to move from retail into institutional money management, you have to be aligned and in sync and understand everything that is happening with compliance. It is super important. Okay, so we have structure, we have compliance, and then we have capital. The structure and the compliance leads to the capital. And the capital comes from credibility. And where does the credibility come from? The credibility comes from the predecessors, which is the structure and the compliance, right? You see this with kind of what has happened with Bitcoin and crypto and kind of the landscape of digital financing and crypto as a whole. The compliance and the structure has been notoriously slow. What does that mean? It means that pioneers and people first to act are usually made into examples, which is unfortunate. They bear the cost of progression. It's through the structure and the compliance that allows the big capital to come. And so you don't want to move too fast. You also don't want to stay stagnant, but it's like building a pyramid, right? Similarly, when you're building a large position in a trade, a swing trade, something that might last weeks or months, you're not going in with the big position to start, right? You're easing into the position, you're structuring it, you're managing it, you're understanding the risk. It's no different as an analogy for you as a trader going from retail to institutional, right? So structure, compliance, and capital. Now, inside of Alpha Bridge, one of the things that we work on is really mapping out the framework before you even start or raise money, right? What does that mean? That means we focus on where you are, we focus on your strategy, we focus on optimizing and understanding those things at a very high level, which is like, okay, where are you right now? Where do you want to go? You have a strategy, but is that strategy the right strategy that's going to get you to where you want to go? We focus on longevity, credibility, and professionalism. Managing money, raising money, whether it's real estate, venture capital, these are relationship businesses. And so we want to focus on longevity, credibility, and professionalism, because at the end of the day, you're in a business to help people, right? By helping people, you're helping yourself. That's why all of the guys that I follow, whether, they're an entrepreneur or they're a programmer or they're a trader, right? They genuinely are setting out to make a difference by helping people, by providing value. Super important to understand this, right? Trading capital, and this is the problem with retail traders, is like, it's very selfish. It's very lonely. It's very emotionally taxing to just be focused on your own money, you, and never thinking that, wow, I have a very high level skill. The skill is so high level that there are some people in the world that are getting paid billions of dollars to do it, but yet I'm here as a retail trader only focusing on me, myself, and my money. It's erroneous thinking, and once you understand it, and once you see it, and once it clicks in your mind, mind, you're never going to think about the strategy the same way, right? Because it's not just about being glued to a screen looking at charts. This is why institutions and some of these high level operators, they're executing strategies that don't require them to look at charts all the time, right? Even though they might have analysts that are looking at charts a lot, the guys who are making the top level decisions are not looking at the charts all the time. Now, how do I actually know that this is going to work, right? Part of it is because of my experience of going through this process myself. And then part of it is knowing and following the best in the business, right? And when you see that what I'm talking about is not something that I made up, right? This is not something I made up. This is not something specific to me. This is the framework and the levels that are already built and baked into the industry through the structure, the compliance, and the capital stack that is operating and existing right now at a very high level. It's just you're not a part of it. And so once you understand that this is not something that is like special or unique, it's already there, it's already out there operating. But the thing that is special and unique is my insight and being able to see that, okay, very small amount of funds, massive amount of desire from traders, quants, capital raisers, but there's not enough structures. There's not enough people that are operating at a high level to be able to actually bring on board all of these people who are interested in doing this. And a lot of these people are super talented. We're talking about people with PhDs who are getting shut down by these hedge funds, which to me, like, talk about getting an asset at a great price. Like, imagine somebody gets shut down from Jane Street or Millennium or Point72, and these people are like destroyed. That was their dream. But now those same people, that same human capital does not have to go to waste. It doesn't have to be, part of it is emotional, right? Like when you don't achieve something, it can be very detrimental, right? Part of what I'm doing is like, I don't want to see people go through that. And so I want to offer them a better and an alternative way to get to the same goal that I think will even have better results than what they were originally trying to do. Now, I want to kind of wrap this up and talk just a little bit about the future, right? Because remember, we're all going to die one day. We're here for a very limited amount of time. All these guys who have billions and they're playing this game now, they're going to be dead. Someone's going to replace them. I believe, and I'm very convicted, that the future belongs to traders, quants, capital raisers, and programmers. And now in the age of AI, it is easier now than ever for somebody with no experience to build an algorithm, to build an application, jump into an industry they have no experience with, and actually build something that solves problems, right? So the daily option and the alpha bridge is really my bet on you. I'm betting on the majority of traders, capital raisers, and quants, and wildly talented people out here in the world that maybe were shut down before, or maybe the opportunity evaded them for whatever reason. And I'm here to tell you that I'm betting on you, I'm counting on you to be able to show up and show your greatness, because we're all going to prosper wildly when we come together to solve a problem. And the problem right now, like I told you, I'm going to keep reiterating this until you go out and start to see it yourself. Very, very small amount of funds, massive amount of interest from traders, quants, capital raisers, programmers, not enough acceptance in this small group of people. And so, I have my foot in the door. I've had a mentor for 7 years. I have my experience. I have what I bring to the table. I'm very, very confident that with the right talent, the right people, that we're going to build something that is going to be absolutely legendary. Want to finish up and say that capital respects structure. It's no different in the real estate game, right? When you're trying to acquire distressed commercial assets and you're trying to do a syndication, or you're trying to spin up a fund, or whatever it is you're trying to do, the big money only comes once you understand how that capital stack works, how the debt works, how the equity works, how the waterfall structure works. It's no different in trading. I think in trading, though, it's much more difficult because I feel like it's a much tighter, it's much more tightly guarded, and it's harder to get in, which I think is nonsense because, like I said before, the compliance, the capital, the structure, these things are all out there right now. It's not like any of this is new. It's just that retail has never been taught this. Right? I think there's only a few guys out here that are actually saying like, hey, if you're a retail trader, like you need to be moving into the institutional fund world. That is where the big money's made. I can't agree with them more. My name is Ryan Mathis, founder of The Daily Option and Alpha Bridge. The Daily Option is my brand. Alpha Bridge is my program where I am looking for, again, great traders, quants, capital raisers, anyone really who is interested in operating and working in upper level finance in the fund world, who wants to learn about this, who wants to be involved with this. I would love for you to jump on a call with me, click the link below, or you can join my school community. It's free. I would love to connect, would love to talk about some of these ideas and what I'm working on and how you can be involved and really how you can go out and do this yourself, right? Like I'm not trying to gatekeep anything. All of the knowledge and all of these resources are out there for you to go and to absorb and to learn and then to go out and apply. And that's really why I'm here, right? To encourage you, to show you what I'm doing, to give you my ideas and my insight and my background and to try to help you as much as I can. If you're ready to think like a manager, you're ready to, look at the possibility of making the transition from retail to institutional, watch my Alpha Bridge briefing below. The link is in the description. Join my free school community. I'm going to be posting a lot of content, doing weekly calls, connecting with everybody, kind of framing everything and kind of the direction I'm moving and what I'm working on. And I would love to see you there, would love to connect with you. Drop a comment, shoot me a like, subscribe to the channel. Always grateful. Love the support. And I got more content on the way. Have a lot of interesting things that I'm working on, and I'm really excited to share it with everybody. I think that's it. Ryan out.